Good morning, guys. Welcome to this Wednesday, May 28th. And we've got a market holding on to their gains. Yesterday, we got a continuation of the little rally. We had the overnight rally. They held on and they held on into the close, and overnight has been holding on as well. So we're in pretty good shape to get this day started. It looks to me like we have a pretty decent shot at getting up here, up to these upper areas again, the 5980s and 90s, and retest those before we get any potential pullback again. So that's kind of where we start off today. Now, the news for today coming in, the mortgage applications came in a little bit mixed. I believe see here, the refinances was way down. The purchases was on the upside. So a mixed bag, but not complete, not in double digits one side or the other. 10 o'clock, we get Richmond Fed Manufacturing. That's about it. We have a 2-year auction coming up at 11:30, 5-year auction at 1, Fed minutes at 2. So 5-year auction could be worth paying attention to at 1 and Fed minutes at 2. It could also create some volatility around about 2 o'clock. So then tomorrow we get the GDP read, jobless claims, corporate profits, a bit more news tomorrow. And on Friday we get that PC, personal income number, the PCE index. That's could be the inflation read. It's going to be interesting to see that one as well. But for today, not a whole lot of news to drive the market today. So I think, given the little pop we had going into the after the weekend, I remember we went into Friday with this big freaking announcement, the 50% tariffs announcement on the European Union, and that the market absolutely took a nosedive from there, and then they recovered a little bit, but then when they postponed it for a month, we popped yesterday, or it popped into Monday's half day, and then we had a continuation of that going into yesterday, and now we have some more continuation going on here in the overnight. So we're going to start off from the long side and see if we can get up here to these upper areas, the 5980s and 90s. Then at that point, and take these out, then we don't have a lot of range until we are back up to all-time highs again. So we're pretty close to those. It's not like we are far away. So definitely it looks like we have a strong market going on right now. So I would be looking at buying against this support area at 59.25s, the 59.15s, or what is that, 15 to 18, or almost 20s. So 15, 17, 18 is to say ended up in a non-even number, didn't it? So, but then again, I draw the levels where it's supposed to be, not exactly what, and then figure out what the numbers are afterwards. So looking to buy against that 59.25 to 28 level, the 17 to 18 support area, 59.10s down to the 5900s for rotations back up. Now, if they retrace further down the 5900, well, then something is going on, and we're backing off this. I would probably take off the long bias below the 59.10s, and probably looking at 5900 here for potential further weakness. And we have a pretty good little attractor area here at 5900. So that's the take out that little attractor area and starts trading below it. I think we have some problems going on, and I would take off the long bias and go back range bound. Now you don't have to worry about the short side until they're back here testing this area, the 5830s again. If they get that far down, then we need to worry about the short side of the market again. But I would be looking at buying this all the way down here to the 5930s. So 58.10 to 58.30s are the areas to for the lower end of this range. If they start trading below that, we have a much bigger problem going on. So looking to buy all the way down to those areas. Looking to get short all the way up here to the 59.90s for rotations back down. And realize we are trading in a range. Right now we have a little bit of momentum to the upside. So that's why we're starting off from the long side. See how far we can take it. As we get up to this upper range, chances are it's going to hold, and we may see a potential rotation back towards the middle of that range. It doesn't have to, and if we have a strong market or a piece of news comes out, we can certainly blow right through it. So, and then that piece of news can work either direction. So it could be a piece of news which runs it right below the lows as well. But you saw the reaction on Friday, right? That was a Truth Social post that they're going to drop 50% tariffs on European Union. So any announcement like that can happen anytime. You just have to be on your toes for it. So when you trade, just make sure you have your stop in and make sure that you're protected at all times. So starting off on the long side, looking to buy against that 59.25 to 28, 59.17, 18, 59.10s for rotations back up. Below 10, taking off the long bias, below the 5900, starting to worry about the short side, just intraday wise, not in a bigger structural way. But if you back off that far, the long bias is over, and we're looking at some pullback at that point. And and as they start trading lower, still as they hit support areas, I don't have to worry about any big structural weakness until they head down to that 58.30. So that's quite a bit to the downside. So we can probe down into this lower range without too much concern. Definitely not trading it from the long side of the market if that starts happening, right? So they trade below that 59.10s, take off the long bias below 5900, start thinking about further retracement back down here towards these lows at the 5870s, 5860s. But still looking to buy against these support areas as you hit them. And then, as we said, below this 5830s, that's when you're way down here. And below this areas, that's when you need to worry about the short side really taking over this. So that's how we get started. Let's see if we can keep this going a little bit. But they took out these areas, the 5890 to 5900 here. Yeah, again, yesterday's overnight they blew through it and started trading higher in yesterday's day session. So far they've been holding it, and they're up here against these upper levels right now. So that's they give us all the reason we need to start trading this on the long side of the market. All right, and for the short side here, the only short I would look for is that here, the 5940s right now. That's where they stalled in the overnight. If that holds, could be a short there for the to get started today. But if they take it out, I would just stay on the long side. Not going to be super aggressive in these upper areas. Haven't been there for a while, so it who knows how strong they are. But you can see here they are 59.55s, 59.65 to 68. 59.75s. They could set up short trades, so watch for them. But if they start taking this higher, I would just stay on the long side. Just be mindful that you don't buy into this resistance area. So it could look great on an F4, but if you end up buying right into this area of resistance, yeah, you're probably going to be on the losing end of a trade. And that's easy. I mean, it's so hard. Well, it's so easy to forget where you are in the bigger picture, and as you get focused on the short term, how it moves, and then get yourself caught buying into resistance area, and that's like, oh crap. And then when you're in the trade, then you just have to try to manage it the best you can. Anyway, but that's getting started on the ES, looking at the bonds and the Nasdaq. Bond market, nice pop going on right now. Look at that. They definitely took off to the upside here, right about the 7:30 time frame, or 7 to 7:30, and now it's really heading higher. So yields coming down a bit, and bond prices going higher. And in the bigger picture on bonds, we are definitely off the lows again. So that's a good sign. So we are off this probe to the downside, probing that low. That got us concerned for a while. Now they're back up here, up above this 112.16. And that's like if they can hold about 112.16, we'll probably rotate back to the 114s. But at this point, starting off on the long sides to see how far they can retrace this. But that's a positive development, and see if they can hold on to that. So trading bonds from the long side just to get started. Looking to buy against the 12, 16, 17s, 12, 10s, down to the 1205 or 6s. I would say below 1210, we take off the long bias at that point. Go back range fund. All right, so that's the bonds. Nasdaq trading that from the long side as well. And big techs really on fire. Some of these tech stocks have really been moving pretty freaking good. So Nasdaq is really making a comeback here. They're all taking out the yesterday's high. They're up here probing, and look at that. I forgot to put the level in. They need to be in the little resistance area right there at the high. right? So they look to buy weakness on the Nasdaq, 470s, 430s down to the 400s for rotations back up. Below 400s, take off the long bias, and if it starts trading below that 360 and the 330s, I would start worrying about the short side a bit, at least intraday. See how far they can take it on the downside. The Nasdaq is coming up pretty close to that upper area, so they're going to start running into some resistance here. Watch that 550. We are up here against the 510 right now. Yeah, the 550 is coming up. So here, these two areas of resistance are the upper area of this last distribution. So you can probably get a cue from Nasdaq. If that holds, we're going to see the ES as well backing off a little bit. So Nasdaq may be in the driver's seat here in terms of back failure to retest this upper area. Or yeah, so failure meaning that you retest it and you fail to take it out, and then you're looking for a pullback. So I would look for short setups against the 510, 520 here, and the 550s for rotations back down. Maybe a probe after the 600s. Either of those three, I would look for short setups against. Just at the levels. If they keep grinding this to the upside, there could certainly be a long trades in between here, or it could be if you get good trade location, try to stick with it. But it's against an upper area of resistance, I would not be super aggressive on the long side until I see it clear this area with a little bit of conviction, take it out, a little bit of volume, and start blowing higher. At that point, yeah, stay on the long side at that point. But not going to be shy about short setups against the 515, the 550s, maybe up to the 600. Nasdaq has a knack for running at one level outside the obvious. So whatever you think is obvious, think one more level on the Nasdaq. But both ES and Nasdaq start from the long side. Let's see if they can keep this going. And just be mindful, look at the headlines. You see start weird action in the market, you see start getting like volatile, and just kind of watch out. Today is the last day on the June expiration on gold. We are rolling gold to the Q expiration for tomorrow. I sent an email about that as well yesterday. But so that's today's last trading day on the June gold contract. All right, so at this point on gold, I haven't checked where Q is at just yet. So let's see, on the capital flow on gold, we are right here, and it's hard to see on the F1 because they've been going back and forth so much. It's hard to get any good back and directional moves there, but you can see this big volume area. And hang on, trying to shift it. Gold, there you are. All right, shifted. So there you go. So I'm looking at this big gold, big volume area. So they've been trading back and forth there. You can see below the TPOs, the volume distribution matches this guy as well. So that's kind of the best they want to lean against right now. And then you have a nice high volume area right here at the 3240s, 30 to 40s. So if they take out this volume edge 3290s, I would look for a rundown here to that attractor at 3240s. And if they hold up here, they are just going to start off range bound and look to buy down to this 3290s. Look to get short up to the 3350s for rotations back down again. So that's the way I'm looking at gold. Trading in that volume area. You can't quite see it on the F2 as well because there's a little bit too much range. I shouldn't really aggregate this even more. I have this aggregated. Let me see. On gold. I have it aggregated 10 ticks. I could go higher on that one probably. But anyway, looking to buy against the 3305s, 3295s, 3290 or 87s here. So these are these three support areas and lower end of the range. I'm going to buy against these three levels, maybe even down to the 3280s. But this is that big ledge on the downside. So they take out these areas. Yeah, we're heading lower at that point. But I would be looking at buying against that 3305s, 3295s, 3287s, 3280s, or 8082s for rotations back up again. And if they start trading higher, start retracing back to value, I would be looking at starting my short setups or looking for shorts against the 3224s, the 33s, the 46s, 55s up to the 60, 61, say for rotations back down again. So that's our range on gold. Just fade the edges. We're trading pretty much in the middle of it right now. So let's see how it goes. But watch that lower 32, 90, 80 to 90s. If that comes out on the downside, especially if the market starts trading higher, the equities, it could mean that they're going to rotate out of gold and into equities. That could drop the gold prices pretty good. But you're going to see gold start fading off in volume. So I'm probably not going to trade that until we roll into the next expiration. And the oil, pretty much just stuck in that range. They're trading right at value. Not much to say, but not much to trade either. So I haven't been trying to trade oil at all. They're pretty much trading here, coming to balance here at 61.70. And this is a pretty neat distribution, coming to very, very concentrated, focused right now, waiting for a move out of the middle. This is what it looks like. They're ready to get the move out of the middle going either to the upside, which could happen if you get the sanctions on Russia, on the Russian oil, or if something comes back in positive about that war or the Iranian situation, we may see an even harder drop to the downside. So if they come up with some kind of a peace deal with the Iranians, doubt it, but they could. And but if that comes out and they can still produce oil and not build a bomb, well, that's probably going to be downward pressure on oil prices. But anyway, so starting off range bound on oil, just going to trade the fade the edges. So looking to sell against the 61.80s, 62, 62.50s. Looking to buy against support, 60.90s, 60.30s down to the 60s for rotations back up. It starts trading below 60 or above that 62.50, 40 to 50 here. It may have a directional move going on. So that's oil, pretty straightforward. So range bound, oil, range bound, gold. And watch the ES and NASDAQ for potential continuation to the upside. And if they can't, and I think NASDAQ is the one which may lead us because they're closer to that upper edge than the ESs. So we'll kind of keep an eye on the NASDAQ. If that fails, we're probably going to drag the ES with it as well. Alrighty, guys, but that's how we get started. I'm gonna wrap it there for now. So good trading, and I will see you back at 11:30 for the next update. Alrighty, guys, later.